One of the interesting things that I heard about specifically for the Metaverse of crime was that they were doing counterfeiting, which surprised me because blockchain is very much about this transparency and okay, if it wasn't Nike that minted this NFT shoe that you can wear in the Metaverse, then why would you buy it? But then I realized, well, people go to Thailand and buy counterfeit bags and whatever for nothing, and they bring it home and wear it. So why wouldn't someone buy a counterfeit Nike shoe to wear in the Metaverse? He knows it's counterfeit, but when you're in the Metaverse, you can't see who minted it. That needs to be when you purchase it and you look on the blockchain, where does this shoe come from? Then it will be clear as day to see that it's counterfeit. But I don't necessarily think people would care if they can get it cheap. Yeah, as you mentioned, my name is Marcus. I have a master's degree in mathematical finance from Copenhagen Business School. And I spent that in two Danish banks, Saxo Bank and Nordea, working with financial risk management, primarily counterparty risk, which is where credit risk and market risk meet each other. So in a sense, market risk is where if the dollar goes down by 5%, how much money do I lose? And then credit risk, if someone owes you money and they go bankrupt, how much do you lose? Right. So in the joint counterparty risk, that is, if the dollar goes down by 5%, how much money will this guy owe you due to financial contracts and that kind of stuff? And if that is enough to bankrupt him, how much will you lose? Right. So it quickly becomes a bit more mathematical and complex than the two individual parts. And that's what I've been working with for 7 years in two banks. And then now I'm working in Januar as a Chief Risk and Compliance Officer, which is very new for me because in Saxo Bank I was the owner of the risk model and was developing, coding myself, and talking with operations and talking with IT and stuff whenever something went wrong. And then I went to Nordea and I came into the management team, and I was just a kind of the project manager, and there were a team for doing the modeling, there were a team for talking with IT, there were a team for doing the reporting, but I was the only one who had the experience from owning the whole value chain, which was very valuable to Nordea, so I kind of spent that knowledge to pull it all together. And now I'm in Januar, which is an even wider role, where I'm responsible for everything, and Januar doesn't really have any financial risk at the moment, but we have a lot of IT security risk, we have a lot of AML risk, and there's a lot of compliance risk and all that stuff. And that's suddenly on my table as well. First of all, we want to be the number one company in the world in terms of risk assessing crypto companies and separate the good from the bad. So the reason Januar was founded originally was because we had a founding team where one of the founders had a website for selling crypto to private individuals, and they also had a wide network within the crypto industry in Denmark and abroad, where they saw that it was the same for everybody else. And what he experienced was that he personally called every single bank in Denmark and had the same conversation with every single bank, which is like, hello, my name is such and such, I would like a corporate account. It's like, yeah, sure, we can find it out. What does your company do? It's like, well, I have this website where I sell bitcoins to private individuals. It's like, yeah, you said Bitcoin, we can't help you, it's outside of our risk appetite. And and no matter what he said, it's like, oh, but I've paid several 100,000 Danish kroner to this large law firm for helping me writing an ML policy, an ML procedure and stuff. I'm registered with the FSA, I'm doing everything by the book. They just didn't care. And we saw that as an opportunity in Januar to say, okay, we have a CEO who's been working with Chainalysis, the world's leading AML analytics firm, and he's been their head of customer training. We have a head of product who's been developing the curriculum for all of their certifications that Chainalysis do, including the FIU certification that is taught to the specialist in GoAML and that kind of stuff who sits and do crypto analytics. why don't we utilize that to become the best in the world to do this risk assessment that the banks don't even want to do? And as a risk, and as having a risk background myself, I know why the banks don't want to do it. The reason is it's not economical. I mean, we had a potential customer where we had to hire in a specialized lawyer to go through the legal setup and do a lot of stuff. And a bank would never do that just for onboarding a customer because that one customer is not worth it, but because we in Januar specialize in these type of customers. For us, it's a learning session. And we gain a lot of value from having this input from our lawyer and having the input from our CEO and all that stuff, which we can then use to hopefully have a more smooth process of onboarding similar companies in the future, which we expect to get because we are very focused in the companies we onboard. So all that combined, yeah, we want to be the best in the world to do this risk assessment. Yeah, and that is again where, because we are so niche focused on crypto companies and crypto related companies or blockchain related companies, we can then go in and do a risk assessment, which is completely different from if a bank had to do it, even though they don't. Because for a bank, when they compare crypto companies to all their other customers, crypto companies will always be high risk, no matter what. Where when we say, okay, all our customers are crypto companies, so we kind of take that high risk segment and then can expand it and say, okay, so a website that sells Bitcoins to private individuals, that's low risk. You know, a crypto exchange or crypto custody service, that's low risk. Then if we say, okay, DeFi, NFTs, whatever, that's high risk because we don't really have any data on what are the red flags for identifying it. And then, of course, we are a lot of industry people who just know a lot of things about the sector and follow it more closely than they would in other banks and that kind of stuff. The challenge is that it's so new still. The example I try to give is that, for instance, with the ICO summer of, I think it was 17, everybody launched an ICO. Yeah. And it turned out that 99% of it was fraud, more or less. And then, the summer after, all of them crashed, and you were able to see, okay, that was a fraud, and this was a red flag. Okay, I should have noticed that. If I knew that, I would have known that was a fraud. And because if you know where to look, you can usually spot them in advance. And then now we have all of these DeFi protocols and NFTs and all of that being created, but we don't have any data because we haven't seen them, default yet. So we don't know what are the data points we need to look at in order to find out if a company is a fraud or not. So it's very difficult for us to do that risk assessment. So there is, even though I want the crypto industry to get out of the bear market and go into a bull run, because that would also be good for our business and our turnover and all that stuff. But as a risk person, part of me want this bear market to become much, much worse, because then I get a lot more data to do this future assessments. Because if we see a lot more defaults, and where auditors and police and all that stuff needs to go in and dig into, okay, why did this company default? Then a lot more fraud will be uncovered, and we will get a lot more red flags that we can monitor in the future. So there is a part of me that wants this bear market to become much worse. Yeah, there's some mental models or whatever in the sector, in the crypto sector, that are just wrong because people don't come from the financial world. They don't know what's best in class. And crypto and DeFi is trying to rebuild the financial world. But if you don't know what's best in class, then you're gonna redo all the same mistakes that have been done in classical financial world. So for instance, there were this case of someone on OpenSea who did insider trading because he knew which NFT tokens were going to be put on the front page. So he bought all of these NFTs in advance, then it came on the front page and the price skyrocketed. So that is clear insider trading. But I saw this Twitter thread where a lot of crypto native, crypto people were like, oh yeah, he's just smart and and I would do the same if I had that information and that's not illegal. It's like, it might not be illegal for NFTs, but it is illegal for regular asset classes. It's clear-cut insider trading.
Yeah.
I mean, there's no doubt about it. And with Mika, all of this is going to change because, well, not for NFTs and DeFi because that's scoped out for Mika, but for crypto in essence, we are going to have these market manipulation regulations for cryptocurrencies and all that stuff. So all of this is hopefully going to change, and hopefully that all of these things suddenly becoming regulated will change the mindset of people in the crypto industry. At least that's my hope. Yeah, for sure. I mean, it's a cat and mouse game or war technology or whatever you want to, whatever metaphor you want to use. But there's definitely the criminals are using technology in order to become better at what they do, and then we have to use technology again to protect ourselves. So what most people don't know is that cybercrime in particular, but most crime really, is all about economics. So for the criminals, they run this whole operation like a business. So if it's economically viable, they will do more of it, and if it's not, they will scale it down. So a really good example is ransomware. Ransomware is one of the most feared types of hacking at the moment, and we have seen a huge growth in it over the past decade. But in this past year or two, it seems like corporates and people in general are starting to realize that you shouldn't pay ransomware hackers. You don't pay ransom. You don't negotiate with terrorists, whatever. And people have started to learn from, okay, this is really a threat. We need to do better backups and all that stuff. So the hackers that use ransomware attacks are starting to see that whenever they do a ransomware attack, they're not getting paid as often as they used to. So the probability of getting paid with this type of attack is decreasing, which decreases the expected revenue from doing these types of attacks. So now we're actually seeing these ransomware attacks decrease, which is really interesting. So in the same way, you need to use technology to prevent this. I think it's like 99% of account takeovers could have been prevented if you had 2FA activated. So as a risk professional, I encourage everybody to activate 2FA on all their accounts, because it will prevent 99% of account takeovers.
2FA being?
Two-factor authentication. Yes. And it's very simple. You just have an app on your phone. For Danish readers, it works kind of like MitID. So there are these things where technology and AI and chatbots and whatever is definitely gonna make the criminals more productive, you say, and lower the cost of doing a hack. It's similar to, I mean, there's a lot of this CEO fraud going around where they send emails to a lot of people, say, hey, I'm your CEO's name, please transfer this money and don't tell anyone it's a secret project or whatever. And some people do it, and most people know not to. I mean, to prevent that, we have implemented processes to say that, okay, if the CEO requests a tax or something, I can't go into details, but there are processes where he cannot do that just by an email. We need to do some kind of verification, or we need to go through all the channels or whatever. But if suddenly you don't get an email, but you get a phone call, or you get a video chat, and it's a deep fake of your CEO's voice and face, I mean, how do you prevent that just by processes? Yeah. I mean, then he needs to show up physically, but I mean, that will ruin the operational ability of him requesting anything. So it's difficult, and these technologies for doing that are becoming cheaper and cheaper, so it will be more economical for criminals to use them instead of just sending an email. So there is this thread coming around where technology makes things a lot easier for criminals, but we also have or get technology usually that tries to fight it. So it is a cat and mouse game where we always try to keep up with what the criminals are doing. We try to partner with the best. So we partnered with one of the best IT security firms in the world that does active or managed operations. So we have an IT security specialist, but he's working more on the second line. I'm the head of second line. So he's working more on the second line risk, so writing policies and creating inventories of our risks and inventory of our IT assets and all that stuff. But the first line IT security stuff, that's managed. We have a managed service for that. Right. Because we couldn't do 24/7 monitoring of our systems if we had to with a limited budget. And we're doing kind of the same for AML and KYC and all that stuff again, where we try to partner up with the best, which is generally the MO for Januar. Always try to partner up with the best. Also for our payment solutions and back-end IT infrastructure and that kind of stuff. Yeah, I do. I mean, it's very much about customer experience. With our first banking partner, I think we spent plus 9 months going through onboarding because they had to do, KYC. Then first we did a KYC questionnaire. Then they're like, oh, you're a payment institute. Oh, then you need to do this enhanced KYC questionnaire. Oh, you have customers related to crypto. Then you need to do a crypto-specific questionnaire. And then we need an AML questionnaire and that kind of stuff. So it just took a really long time, and we got all these long questionnaires we needed to fill out, and it was all very sequential. Where if you have these processes set up in a good way, and you use register data so you can pull up-to-date data on your potential customers and that kind of stuff, you can make the onboarding experience much smoother by having better AML and KYC technology embedded into your infrastructure. Right. So it would definitely become a competitive advantage, and that's what we're trying to do. I mean, most of our customers, again, onboard crypto companies in, I think it's a month or 2 or something. We try to do it in 2 weeks at the moment, and we would really like to get it down to 2 days or something like that, where it's just, a person reviews the AML policy. Does that look up to code? Fine, then all the rest, that's like a computer checking off that it's within the lines of our policies and that kind of stuff. In general, I think we will see much of the same crime in the metaverse that we have seen in the normal day. I'm not sure if you can do pickpocketing in the metaverse, but if you could, they probably would. Yeah. One of the interesting things that I heard about specifically for the metaverse of crime was that they were doing counterfeiting, which surprised me because blockchain is very much about this transparency and okay, if it wasn't Nike that minted this NFT shoe that you can wear in the metaverse, then why would you buy it? But then I realized, well, people go to Thailand and buy counterfeit bags and whatever for nothing, and they bring it home and wear it. So why wouldn't someone buy a counterfeit Nike shoe to wear in the metaverse? He knows it's counterfeit, but when you're in the metaverse, you can't see who minted it. That needs to be when you purchase it and you look on the blockchain, where does this shoe come from? Then it will be clear as day to see that it's counterfeit. But I don't necessarily think people would care if they can get it cheap. Personally, I'm representing Januar in a network called FIT, which is a task force made by Danish police. And they have separate task force, but I'm part of the one about data sharing, because there are actually a lot of regulatory blockers for sharing data about criminals between financial institutions, which means that we can't. So there is so I'm working in that direction, working with the task force on how we could potentially do that, how we could request new legislation and or set up registries that are within the laws and that kind of stuff. And then in general, we are collaborating with a transaction monitoring tool. Its AI model is based on kind of fractional learning. So it is able to take the data points that we provide into the model and the data points that all of the other customers are providing into the model and use that to train the model without us being able to see the data points of all the other customers. So that is a way to kind of pool in data for transactions from a lot of different financial entities and train an AI model to spot transaction, money laundering transactions and that kind of stuff, or terror financing. And also on the crypto side, we're doing the same. We're partnering up with Chainalysis because we have this relation with our CEO and stuff, who's an ex-Chainalysis employee, and in Chainalysis as well, but also in all the other crypto analytics companies. You can go in and you can flag wallets. So if we have a customer that says, hey, I was defrauded, the funds were sent to this crypto wallet, then we go in and flag it. And then everybody else using that crypto analytics firm, they can see, okay, that wallet is related to fraud. So that is the good thing about being in crypto compared to being in fiat. Because in fiat, we can't share anything. I mean, we don't know if we have a customer coming in and we can see, okay, they send money from that account, fine, we can see they send money from that account. We don't know what the risk status is of that account that they're sending money from. We can only see, okay, what is the KYC data we have on our customer, and then we can of course do all our transaction monitoring screening and sanction screening and PEP screening and all the stuff that we do in our tools. But we don't have a risk score for every single sender or recipient that our customers transact with on the fiat side. On the crypto side, we do. Because on the crypto side, we have these blockchain analytics tools that go in and score, okay, this wallet, 5% of the transactions going in and out of that wallet is directly or indirectly related to a darknet market. I mean, then we can go in and we can assess that, okay, that's too much, we don't want to touch that wallet. We tell our customer, who owns that wallet that you send money to? Oh, that's customer Jens. Then we say, okay, fine. We we advise you to offboard Jens as your customer. And then we can do a report to GoML or whatever, depending on the levels and whatnot. Oh yes, very much.
And how is this sorted out at the regulatory level?
Right now there's actually a legal battle going on as we speak. Because I think it was in the Netherlands, someone sued the government because the UBO, so ultimate beneficiary owner, they had a registry of, okay, so when you have a company, you have the legal entity. That is can be owned by anything. They can be owned by a company or person or whatever. And then there's the ultimate beneficiary owner, which is the person, not the legal entity or legal person or whatever, but the physical person that is on top of this whole chain of companies. And in Denmark, we have a registry for that. We have that. It's mandated by European AML Directive 5 that every company should create such a UBO registry. And this guy in the Netherlands sued the government because his data was available in this UBO registry and won. So the Netherlands actually removed the public access to this UBO registry because of GDPR, which, it makes no sense. And we are a lot of people in the financial crime prevention community that are outraged by this decision by the Netherlands courts. So it's actually a big issue at the moment. Okay, what's going to happen in this way? because these UBO registries are really, really important for us to do proper onboarding and risk assessment of our customers. And we as a payment institute might be able to say that we have a legitimate interest and be able to get access to those registries. But there are a lot of other firms in the industry. Some of our data providers or whatever, they might not, if they are not a registered data provider or something like that. And journalists and whatever that are actually doing these kind of deep investigations and uncovering fraud in these companies and figuring out, okay, who's the ultimate beneficial owner of this fraudulent company, they might not be able to get access to this registry if it's not public. So that's actually a huge issue. I think the criminals will always be a bit ahead because they're really inventive. Their business depends on it because they know we are always trying to catch them. But we're always trying to catch up. I mean, it's been like this for ages. As long as there's people with bad moral, there'll be criminals or people trying to defraud someone else. If we find a way to catch and jail everybody who does it, someone someday with a bad moral will figure a new way to do something that avoids being detected. So I think there will always be crime. That doesn't mean we shouldn't try to stop it.